Copyright in these lectures is either owned by the ANU or a third party who has licensed the ANU to use it. Students may use the recording for personal study only. No lecture may be communicated online, copied or shared without the prior permission of the ANU.
Okay, good morning. Yeah, I had to struggle to find a USB here. Okay, let me just first acknowledgement of the country. We acknowledge and celebrate the first Australians on whose tradition lands we meet and pay our respect to the elders of the Ngunnawal people, past and present. Okay, so I usually start the lecture with this picture. So, oh, I see. It's not very clear. Let me just. Let's see. Must be a light. Oh, there? Oh, thank you. Yeah. Well, maybe we can turn it up later. Yeah, just to show you this. Yeah, so this is a map of the, well, it's a picture from the, from the satellite. And then, well, this is sort of a special technology according to NASA. And then it's just showing the light, right? Where basically where the electricity is used more, and you can see that like U.S. on the eastern side, right? And then Europe on towards the western side. And then if you come to Asia, you see that island, that's Japan, and then Korea and China, right? But, and also there's India. But if you look at the density of the light, right? Obviously, the brightest is like US east half, and Europe, western part, and Japan is bright. But the thing is, if you look at like Africa, it's still pretty dark, right? Australia, we know it's dark in the middle because there's nothing much there. So, well, this basically, you can use this like, for energy, right? Some parts of the world are using more energy, right? So, but this is somewhat, if you talk to like an analyst who specializes in natural resources, then the analyst, actually I've seen the analyst use this. That's where I got the hint, right? So the analyst was talking about, well, what would be the, price of the natural gas or, petrol, all these things, right? Or the coal. So these were all related to, well, part of is electricity, but that's where the people live and then use more energy, right? So, but that is correlated with income, right? So that's how it's related. Basically, it's more related. It's related to economic activity. So that's how this picture is. Then in Asia, especially we'll talk about Asia. So the darker area, right, which is well, in the middle of China, but also even if you look at China, it's not all the part, right, which is very bright. It's only the coastal parts. So India is, relatively, the lights are there, but it's not as dense as like in Europe or the US. So basically, this is showing that, well, there's room for growth. Okay? So there's why we look at Asia. Well, of course, we are, well, Australia is very close to Asia, and some people say it's part of Asia, but it's basically where the action is, or the action has been in Asia for the past 20 years. Basically the growth, right? The growth of the economy was the largest or the greatest in the past 20 years, especially China and India. So that's why people pay attention to this area, right? Especially, like investors, right? We're always paying attention to what's happening in Asia. Okay, so let me just increase the lighting. Let me see. Oops. Oh, no, this is... Okay, so I cannot adjust. What's wrong? Yeah, sorry about this. So this course basically looks at Asia and Asian capital markets. So we look at this in the global perspective, which means that we will not look at, like Korea, Japan, China, India, like that. So we could do that, but I would like you to learn about some concepts, more broader concepts, to look at these different economies. Okay, so basically it's a conceptual framework, which is about law and economics. Okay, so it's law and economics. And why this is important is because if you look at Asia, the economy, right? If you look at the different countries by growth, there are so many countries at different stages of growth. So, for example, Japan is a so-called low growth economy, right? It can be, in the past 20 years, the economy had like a negative growth. Population has already aged, right? Like soon, 1/3 of the population will be over 65 years old. Currently, probably around 25%. Right? So there are not many young people, relatively to more older generation. So that's why, that's not the only reason, but the growth potential, right, is not there. Okay, so it's a more mature economy. But that's a good way of saying, right, mature economy. But basically, the population has become very old. And then you have this Hong Kong, Singapore, Korea, Taiwan. These countries used to be called Asian tigers in 80s and 90s because these were the countries that were growing very fast. And now these countries are more maturing. Okay. And then if you look at the past 20 years, after these Asian tigers came China and India from 1990s, right? So these two economies, not just fast growing, but the size is big, right? It's huge. So therefore, if these two economies grow fast, then the impact on the global economy is very big, right? Because, for example, China is a big trade company, trading country, right? So they have exports, imports, to globally. But if China imports, right, say, good example is like baby powder, right? Right. So Chinese consumers started to buy like baby powders or milk for babies from overseas, right? So then suddenly the demand is huge, right? And that's also true. For example, like I have a friend, classmate who's like a CEO of a cosmetic company in Japan. And he said the demand has increased substantially from China. Right? So therefore, this demand is coming from with growth. So if the economy grows very fast, then that has a major impact on the entire global economy. Okay, and then so therefore, here in Asia you have this mature country, and then sort of maturing economies, and then still growing, right, with great potential. So that's why Asia cannot be sort of understood by just one concept. Okay. So, and there are, other emerging countries and also countries yet to emerge, right? Like Cambodia and those Myanmar and these countries. So, so how do we, analyze or look at these different economies? Okay, and then the background, historical background of the countries are also very different, not just the growth, right? So China and Vietnam are the major socialist countries, right? And the rest are, well, you can say market-based economies, but they're also different from like US, UK, what we call Anglo-Saxon type economies. Okay, so we'll talk about this in this course. So even though you can say that many Asian countries are based on market, but if you compare that with those with US and UK or Australia, New Zealand, which is more, Anglo-Saxon based economies, Asian countries can be very different, okay? So even though they are market-based economies, right? So that's why we need to have some, conceptual framework to capture all these different economies. So that's where we look at, law and economics. So before we go into, law and economics, how about, are there any similarities with the economy, right? In this case, we're talking about macroeconomy. So, and this is what we find or what we observe. In Asian countries, the savings rate is relatively high, right? But this is comparing to especially USA, okay? And also, Asian countries had grown, many of them, based on exports. So you export goods, sell goods overseas, and then you grow, right? So the business grows. If the business expands, you produce more, right, and you export, right? So, so that's export-led economy, and this is, quite true for most of the Asian countries, most of the, the major countries. Like Japan grew in 1950s and 60s, and that was export-led, right? Very fast, around 10% per year. And that's true for China, right? Perhaps not much for India, but China is, very obvious, and Korea as well. So these countries, most of them had this so-called, export-led policies by the government. And then if you export more, then what happens is this, right? You will naturally have trade surplus. So you're selling more to a foreign country than buying, right? So therefore you will have trade surplus. So Asian economies has had higher growth, higher savings, which is brought by this export-led economy. Okay, and then on the other hand, if you look at the U.S., savings rate has been low. Okay, and then trade balance has been in deficit. Okay, so U.S. imports more than they export. Okay, usually. Okay, so so that's why if you look at the Asian economies, high savings, trade surplus. U.S. low savings, trade deficit. Okay, so this pattern has been there for many years, almost 30 to 40 years. Okay. And this basically creates this so-called global imbalance, because U.S. is a big economy, right? And then if U.S. is having this trade deficit, and Asian countries as a whole has this trade surplus, so there has to be some sort of economic, well, people say economic issues. There could be, or you can say these are economic issues, problems, but these are the result of these two different types of economies in the world. So, so we'll talk about this this week, about this imbalance, and then each economy, right, in Asia has different historical backgrounds, as I said, and we'll look at these differences, but we'll look at it from law and economics. Okay, so that's basically, let me see, yeah, so that's basically what we're going to do. And here, I'm saying that we look at, we won't look at all the economies, we'll look at economies that has large impact. Okay. So, well, this is saying that, well, this is related to, your project, group project that you do. So the group project basically is like is a consultancy report, and then you're going to write a report for the fund manager, right? So if you're going to, and this fund manager basically looks at, major markets. So that's why we'll focus on basically major markets, okay, or major countries. So where do we look at? We look at China and India, right? Japan, and also Asian tigers to some extent. Okay, so basically these are the focus, and the outline is that we spend, I think, including this week, first 3 weeks on more macro issues or macro view. So first we look at this so-called global imbalance, which is very important when we talk about the flow of money, flow of capital in the world. And also that basically extends to the currency problem. Okay, so this is currency problem is related to this so-called global imbalance. Imbalance is between U.S. and Asia. Okay, then why you might think, okay, how about Europe? Well, Europe is quite balanced. So that's why it's not part of this imbalance. The major imbalance is coming from Asian countries and the U.S. Okay? So, so that's what we're going to talk about. Therefore, it's related to the currency issue. And then we'll talk about how the capital market is developing overall in Asia. Or we'll compare Asia and the other countries. So that's the first 3 weeks. And then finally, from the 4th week, we'll go into this. Well, this is a core part of this course. So we'll talk about state capitalism, which is mostly about China. Well, state capitalism is because China is a socialist country, but have introduced market mechanism from 1990s, right? Deng Xiaoping said, black cat or white cat, it doesn't matter if it does catch the mouse, right? So, so that's basically the beginning of introducing the market economy in China. So this is state capitalism is government-led, but still has market economy. And then when we look at Asia, or not just Asia, actually, if you look at even Europe, the family-controlled firms are pretty, widespread. So obviously, family is a very important factor in many Asian countries. So that's why we're focusing on this family firms or family-controlled firms. And the other thing, the third one is in Asia, people say, well, there's a lot of groups, like corporate groups. Well, that is true in quite a number of countries, especially Japan and Korea is known for these corporate groups. Okay? So, so we'll talk about this. And then finally, we talk about the informal sector. For this, we'll look at India, okay? So India, relatively speaking, has a less developed financial markets, so the firms have to rely on informal financing, okay? And then at the end of this course, I'll talk about the financial crisis and the Asian capital markets and lesson from Japan, because Japan had asset and real estate bubble in the late 80s and then crashed, right? It crashed in 1990, and then ever since early 90s, for almost 15, 20 years, the growth, right, went down. So since then, the economy has been very slow growth. And the global financial crisis of 2007, 2009 has some similar aspects. Okay? So that's why we know that the growth has not yet recovered, right? Right? It's still, U.S. economy has been doing quite well, but other than that, of course, China has grown, was not that much affected, but for other economies, the growth has been not great, right, after GFC. So that's why many economists has compared, right, what happened in Japan and what happened after the GFC. So we'll talk about that financial crisis in the last week. So this is the outline. So now I'll go into the lecture, but just before going into the lecture, let me talk about this project. So I know quite a few of you have already formed groups, right? So that's good. And so this is an assignment, as I said, it's a consultancy report for a portfolio manager, okay? And when I say that, then people say, well, then do you have to do a valuation analysis or, macro analysis and these things, right? Because if you are a portfolio manager, you will have to look at, economy, the industry, and also, financial analysis of each company. But here, I'm saying that, well, let's not do that. Means that let's look at some different aspects, which is based on our lecture, which is law and finance. But if I say law and finance, what is this? Well, is that simply saying if you are an investor in these companies, then do you think that if you're the minority shareholder, right? You're not the controlling shareholder, right? You're an outside investor. So if you're we call this minority shareholders. So if you're minority shareholders, are your rights, right, as a shareholder, are they well protected, right, as a shareholder? And also your wealth, which means the money that you invested, are they not being well, not exploit, but well, it's sort of exploitation by the controlling shareholder. Okay, controlling shareholder, you can think if it's China, state-owned company, it's a state, right? If it's a family-owned company, then it's the family, right? So basically, if you are going to invest in a company, then you will have to look into these, who's controlling the company, okay? So that's the aspect of this assignment. So it's not financial analysis, it's not macro analysis. It's for each company, who controls, right? In other words, you can say it's corporate governance. So that's where you have to look at. So here I'm saying that take a look at the largest companies in terms of market valuation for each market because it's easier to find information, right? Of course, you can look into small companies, but then sometimes the disclosure is not that great. But if you're looking at those big top 10 companies in each market, then I'm pretty sure that you can find a lot of information on the internet as well as on other sources. So that's why I have said, well, look at the largest stocks in each market. Okay. So in that case, here what you're supposed to do is pick 3 which you think are good companies and pick 3 which are not good. Okay. So, or you can say avoid these stocks. Okay. So that's what you're supposed to do. So basically what you need to do is to go into the most useful information is in the annual report. And if these are good, big companies, you can easily find them. Okay. Okay. And yeah, in the past years, some people said, well, how about companies that are listed in New York, especially like Chinese companies? Well, I said, well, it's all right. Yeah, we can consider them as a Chinese company, but it's listed in New York. That's fine. Yeah. So I'm okay with this, and you can include more than one stock from a country, right? It doesn't have to be all from different countries. You can choose multiple stocks from one country. Okay. Okay. So this is basically the the assignment, and then as I said, right, portfolio manager needs macro analysis, industry analysis, and financial analysis, but you can assume that someone else in your consultancy firm is doing this. Okay. So you're like a department for like governance, law, and institutions, right? So you're the sort of a specialist. And these factors, these things, law and finance, or these things that you learn in this course, is actually being used. These concepts are actually being used by portfolio managers. Okay, so there are commercial database that actually compiles all this information, who controls, right, all these things, governance, and then actually portfolio managers basically use this information. So what we're doing here in this course, what we learn in this course is not like purely academic. It's actually it can be quite academic, but actually this is actually being used. Okay, especially in the past maybe 15 years. Yeah. So, so this is something that is on top of what you learn in a finance program, right? So I think this is something quite unique. Okay. Yeah, and let me see. So since you will learn about different concepts for different weeks, right? So therefore, you do have to continuously, work through throughout this course. It's not like you, at the end of the course, then you learn, you write a report at the very end, right? It's not like that. I think what you should do is you have to discuss with your group mates and then continuously, work on this project, and then in the end, you have the final product, okay? Okay, so that's the thing, and let me see. Yeah. So instruction is that you can read all these things, right? But the details are here. And the group size, I think we have more than or close to 200, maybe close to 250 students enrolled. So I would say the group size should be around 6, okay? But perhaps not more than 6, right? And I think the groups that are already formed has mostly 6 students. Yeah. And in the end, if you cannot find a group, then we'll do something. I'll help you. And then once the group is formed, can the group leader send me email of the member names, right? And the ID, the student ID. And then once you finish, where the deadline is end of week 11, and so this is a turn it in submission, right? And then you don't have to maybe worry at this point, but when you submit the project, please put the group name on the first page. Every year there are a few groups, 1 or 2, doesn't have any names, okay? Sometimes it doesn't have any names, doesn't have any group names. Yeah, if you don't have the group number or group names, then it's difficult for me to find. I can find it, but it's not easy to find the group. So make sure that your group name is on the cover page. Okay, so as I said, you can find most of the information on the website. But of course, you can use Yahoo Finance or Bloomberg or a lot of other finance information on the internet. And library has this Thomson financial data stream, so that you can use. I think the number of terminals are limited, but there are information from. You can get information, some information from this Thomson database. All right. So So this. So then in the end, right? I have this do's and don'ts. My suggestion. Okay, you have you have to look at. You have to choose from top 10 stocks, right? But I know that some groups in the past have looked at all of them, right? So if you look at maybe five markets or 5-6 markets, then you have 10, right, each. So you will look at maybe 60 or 70 or sometimes 100 companies and then rank them, right? Of course, you can do that if you have artificial intelligence, but I think that may not be a good or good way. My suggestion is just first pick maybe like, 5 or 6, and then take a look, right? And then discuss. And then if you think, oh, maybe it's not good, you could have some other information, right, from the internet or elsewhere, saying that, oh, let's say, oh, this company may have, good, like corporate governance. Then you can look into this company. So I think you have to probably, a better way is to do trial and error, right? Instead of putting everything like hundreds of stocks, not maybe not 100, but maybe like 60 or 80 stocks, right? And then compare all of them. I think it's probably better to do this more, as like a trial and error. Yeah, and then you can have appendix outside the 3,000 words, so you can add appendix, but just include those tables and figures. It can be inside the text, but also it can be in the appendix, but you don't have to create everything, okay? And this is, what's important is your logic and the presentation, okay? So that's why I said it should be in a professional report rather than academic report. So this is a professional report that people write in companies, right? So that's why you should have, you should write, in a professional way. And I have given you examples, one example on the website, okay, on the bottom. Okay, so that's basically about this project. Yeah, and then this is the rubric. So as I said, whether you use the concept from the class adequately, and also is it persuasive, right? And then also finally the presentation. Yeah. So that's basically how you get the points. Okay, but I'm pretty sure you have questions later on, so that's fine. Yeah, we can typically we have by appointment the group and I meet and then discuss, is this the right strategy, and then I can give you suggestions. Yeah. All right. Let's see. Yeah. Yeah, and then, the roadmap, please submit this roadmap. Once you have the group, just, write down your plans, right? It doesn't have to be specific. I mean, you don't have to say, well, I'm going to do this company, but just, write down your plans. Yeah. Okay. Okay, any questions about the project? Yeah. Oh, you mean the undergrads and graduate? No, you cannot mix. I think I've written that somewhere. Yeah, you cannot have undergrad and graduate together. Yeah, because the grading scheme is slightly different. Yeah.
It seems to me the project is not redeemable, right?
It's not great.
Redeemable.
Redeemable, no. No. It's a major part of this course. If you don't do this, then I don't think, by doing this, I think you understand more because you dig into the real data, right? If you just listen to the lecture, then it will be concept, right? But once you go into the company, and then you see, oh, who's controlling this company, right? Okay. Okay, let me see. So we'll go into this first lecture, but can you give me 10 minutes? I'll be right back. Yeah. Be right back. Okay, yeah, thanks for waiting. Do you have any questions? Since you had 10 minutes, so you might have some questions. No? Okay, so then let me...
Most of the project is about legal and corporate governance frameworks. Right?
Yes, yes.
So it's not about like figures, financial figures.
No.
Okay.
Well, first, let me just briefly go through how Asia is growing. Okay, so especially for China and India, it's in the past 20 years, but we look a little bit, longer, from 60s. Okay, so we look at the size of the economy, potential for future growth. And so that's sort of an overview. But this is the important part, right? So this is the imbalance between US and Asia, right? Okay. So this is comparing the growth of Japan, which is blue line, and red is USA. So this is, from 1961. Until like 2017, I think, yeah. So you can see, right, this blue line in the 60s, yeah, Japan was growing like 10%, right? So very fast. If you grow 10%, in 10 years, the economy can double, right? Easily double. So that was the speed Japan was growing. But then you can see, well, US, on the other hand, has been, like 5, between 0 and 5, but fairly stable, right, over this like 50 years, okay. And you can see Japan, right? There's sort of a downward trend, right? Very fast, but then at the beginning, but then going down. And this is, okay, there are several major things that happen in history. So this is 1971. It's called Nixon shock. This is something that we'll talk about for the currency. Okay, so this is a very important event. And then this is the first oil crisis, 1973. As you can see, where the oil crisis is when the oil price went up 4 times. Okay, the OPEC countries said they raised the oil price 4 times. Okay, so therefore, at that time, you can see that the impact on the global economy was pretty severe. There was a second one in 1978, but the first one probably has the biggest impact because it went 4 times. Okay, what is the price of petrol now?
Somewhat like
90, right? In this 1973, it was $4 per barrel, and then it went up to 16. Okay, but although the level, compared to today, is low, but having from 4 to 16 was a big, major jump. So that had a major impact on the global economy, as you can see from this growth, right? So Japan was growing like more than 10%, but then suddenly this year is negative, right? So, and then for Japan, there has been this asset price bubble, which peaked. The price peaked in 1990. I think it's 1990, like December, And then the central bank raised the interest rate, and then the bubble crashed. Okay, so that's beginning of 1991, and then the economy slowed down, right? So it doesn't slow down immediately, but you can see from around 1992 or 3, right, it slowed down significantly, and then negative growth, 98, and then it has been like this. So, and then this is the 2000 dot-com bubble. Yeah. So you can see after the dot-com bubble, there has been, right, this decrease in the growth. And then this big dip is the GFC, the global financial crisis. So, and then it has recovered. Yeah. But, so this is, what, like the long history. But you can see that, well, Japan, right? 10% at the beginning, but now it's very low growth. If the growth is positive, I think people are generally happy. Yeah. Okay. And these are the Asian tigers, right? So this is again from the 60s to the recent. You can see, right, the level of growth, right? You can see the difference in scale compared to this, right? Or scale of the, yeah. So you can see that growth has been, above 5 and sometimes like above 15, right? But of course, after like mid-90s, the growth has become like below 10%. Yeah, Singapore, there's a big dip, a big spike here around 2010. Yeah. So, so this is how it looks like. So it's still, right, it's pretty high, right? And this is China and India. Some investment banker said Chindia. Sounds silly, but then you can see, right, it's basically the blue one is China. You can see from 61, right? And then where it takes off is around early 90s, right? Of course, there has been high growth in the 80s, but you can see the growth is pretty volatile, right? Yeah, so it's probably, I think in those days there were famine and all these things, right? So that's why the economy the growth is pretty volatile. But you can see from the early 19s and until recent, this growth has been fairly stable, right? Fairly stable, and yeah, it's around 10%. It's very, very fast. And India has been catching up, right? So these are the two, fast growing, not just fast growing, but it's large, big economies. Okay. So this is just a size based on US dollars. And we know that China has the second largest, right, GNP or GDP in the world. And this is 2015. You can see that in US dollars, yes, it's pretty. I mean, even compared with Japan, China is, quite large. Okay. But I'll tell you about this, issue with this measurement. Okay. And this is like the composition, right? So you can see that top 6 countries, right, basically consists of 75%, including the EU, 75% of the global GDP. Yeah. So you can see that, how influential these economies are. Okay. And this is the problem, okay? We're using US dollars, okay? So US dollar fluctuates, right? The value fluctuates. So if you just based on the US dollars, then what happens? Well, this relative position right, could change, right? Of course, it won't change drastically, but you can say that it's based on a very volatile measure. Okay, so that's why people have, like IMF, have been using this so-called international dollar. Okay, international dollar is, you might have heard of this purchasing power parity. Okay, so it's basically inflation-adjusted measure. Okay, so you can say it's a, as I said here, it's a hypothetical unit of currency that has the same purchasing power that the US dollar had in US at a given point in time. So basically you fix a point in time, and then inflation goes up in one country and goes down in another country, right? So basically you fix one point and then you adjust for that difference in the inflation rate, which is the purchasing power. So that's how you compute this international dollar. So in other words, it's called purchasing power parity. Yeah, so here, purchasing power parity is basically, let's say this is an increase in the purchasing power of a country, which means that increase means that if the currency becomes stronger, you can buy with 1 unit of your currency, right? In this case, appreciation of a currency, right? Let's say US, right? US dollar appreciate, which means that US dollar can buy, with 1 US dollar, you can buy more, right? More foreign currency, right? So that's why that will increase the purchasing power. But on the other hand, if there's domestic inflation, then that means the price, right? Compared to the other countries, your price is going, let's say US inflation is higher, which means that if you, it's not just the appreciation of the currency, but if the domestic inflation goes up, then the purchasing power goes down, right? And but you have to look at this relative, right? So because you are trading, right? A country, assuming that the country has a trade, so therefore, how much is your purchasing power increasing or decreasing relatively to your inflation, relatively to the foreign inflation? Sorry, yeah. So that's why you look at the difference. So that's basically how you measure this purchasing power. Okay. So if we use that, then the China's GDP becomes #1. Yeah. So in US, and actually India becomes number 4, and then Japan and Russia. So that's when you adjust for these, inflation rates. So this is again based on international dollars. This is comparison by IMF. So #1, as I said, is China, right? European Union, second US, India, Japan, and so on. So you can see other Asian countries around in this top like 22. This is just to give you an example. And then this is the GDP, right? But that is the entire economy. But let's go into per capita. Now, this becomes very different, right? This is per capita, also inflation adjusted. Okay? Now, this is starting from 1980, and then till 1970, I think it's 1916, yeah. So 2016, and then you can see this is Singapore, okay? Per capita GDP adjusted for inflation, Singapore is #1, okay? Divided by the population, right? And so this is, the blue one is Japan, this red one is Hong Kong, no, sorry, the blue one, sorry, the purple one is Japan, this one is USA, the blue one is USA, and then this Korea, and this is China and India. So you can see if you look at per capita, China and India, China is, is creeping up like this, but you can see compared to other countries, still, if it's per capita, it's, quite low, okay? So this is when you talk to investment bankers, they say, oh, this is potential for growth, right? There's still a lot of growth opportunities. Even though people talk about slowing down of Chinese economy, but if you look at per capita GDP, it's still this level, right? Of course, there is a problem. There could be a problem of this income distribution that, which you cannot see from this, right? Because this is just the average, but income distribution is basically the rich people and the poor people, right? The difference could be large, right? Of course, some parts, very rich people might be growing in terms of, per capita income, maybe rich people may be up here, right? So, so we cannot see this kind of income disparity from this, but at least on average, it looks like this, right? So that means that if there's low-income people, there's still room for increase, right? Of course, not guaranteed, right? It depends on how the economy does, how the government does. All these policies all matter, right? But there's a potential, right? And and there are countries that used to be performing so well, but then suddenly it went down the drain, okay? There are countries like that, especially in South America. Okay, South America, like that some of the countries like Venezuela and having problems, right? But at some point, like in 60s and 70s, some of the South American countries were one of the had the best economies in the world. But somehow, with the wrong policy, and other things happen, it's just having a bad time now. So, it doesn't, you can see, right, this like, some countries are doing well, but it doesn't mean, right, something could happen, right? Okay. But anyway, so this is the per capita GDP. Yeah, so this is just for your reference. Globally, you can see, right, Qatar is highest. Yeah, in terms of per capita GDP, but this is in international dollars. Like Macau, Luxembourg, Singapore, right? Singapore is still high. Yeah, Brunei, right? These are Brunei, Qatar, oil-producing, petrol-producing countries. Like Norway, that's true, right? This is a member of the OPEC. Kuwait, UAE, right? So you can see, so these oil-producing countries have very high income. Yeah. GDP per capita. Right. So now we have looked at the growth, right? But then we look at the per capita GDP, right? But you can say that if you decompose the GDP growth, you can decompose this GDP growth into per capita GDP growth and population growth, right? So to look at the growth of an economy, you can look at these two things separately, okay? So this is where some people are concerned, especially for China, about the growth, right? Future growth. Partly is this, right? So let's see what happens. So this is like a prediction, right? Of until 2025, because population growth is quite, it's not that difficult to predict, because you know the population, right, today and the age. Then you can have the life expectancy, and then you can estimate fairly, well, I wouldn't say easily, but it's probably easier than forecasting economic growth. So you can see the population, right? China, yes, by 2025, it will have 1 trillion, is it? Yeah. Yeah. And more than, right? And then India is about this. US, this. You can, let's go to Japan. It's actually going down, right? Yeah, because the birth rate is quite low. But you can see that from this prediction, this is from World Bank and OECD, they predict the population to grow, to this much. But this doesn't necessarily tell you the composition, age composition. So let's look at this, okay? So now let's look at Japan. 60, okay, this is 2011, so this is already 7 years old, but this is 65 years and older. At that point was 22%, right? But now it's 25%, okay? So soon it may reach like 30%, okay? And you can see the 15 to 64 years. This is the working population. Like in Japan, it's 64%, right? This is the young population, is 13%. Look at China. 73.6% is the working age, but at the point of 2011, 8.9% is over 65 years old, okay? So if you compare with Japan, it's much healthier, right? And then you have more children. India, wow, look at this, 29% below 14, right? And 65 over is only 5%, right? So in terms of the working population, yes, India has a very high number as well, like China. Korea, around the same, but this young children is a bit less, but more than Japan. 65 years and older is 11%, right? Look at United States. You can see the working population is 67%. And children is 20%, so still good, and 65 years over is 13, right? Just as a reference, I put in Australia. It looks pretty much like the US. Yeah. Okay, so this is how it looks like. But China, right, is especially concerned with the aging population, because there was this one-child policy has been in place, right, for some time, and then I think it was abolished, was it? Is it now like a two-child policy? Yeah. But two doesn't necessarily, two is, I think, is just sustainable, right? If it's one, the population will go down, yeah. So, obviously, this is, a risk for growth. And Japan is the country in Asia that is already facing this problem, okay? So, so this is a forecast. This is fairly recent.